The biggest incumbents in our space historically have been Salesforce, CPQ, and Zuora, right? One of the problems is that a massive portion of their revenue is based on implementation and consulting services, and about 30 to 40% of their implementations fail. We've seen a lot of teams tell us that, sales are sometimes closing contracts that the billing engine actually cannot support.
The product teams and everybody else that are in the downstream effects of closing that deal on bespoke one-off stuff can be quite painful.
The grand vision is world domination, of course.
What's maybe a step or two before world domination?
The grand vision, we really want to give companies this sort of unified infrastructure to automate their revenue collection and revenue management. Companies should be able to price and sell in any way that they want to. They should be able to leverage any go-to-market motion.
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in.
Hi, everybody. So as you know, I've been fascinated with the topic of revenue models for quite a long time. So I'm very excited to welcome our guest, Riya Grover, to the show today. And a thank you to Seema from Andreessen Horowitz for the introduction. All right. So Riya is a traditional underachiever, right? A degree from Oxford, Yale, and Harvard, went to Deutsche Bank as an analyst in derivatives before starting her own company, Feeder, which was acquired by Compass Group in 2020. And what do all amazing founders do on their second tour of duty? They solve the problems they had scaling their first company, which in this case was a complexity of revenue in a modern world of how businesses are created. So let's learn all about the wonderful world of revenue today. Riya, welcome to the show.
Thank you. Thank you for having me, Sasha.
All right, here we go. All right, so let's dive in for listeners. Okay, so let's just set the foundation. What has changed over the past decade about revenue generation in companies?
That's a big question. So we'll try and kind of hit as much as we can. A lot has changed, I think, about revenue generation and really fundamentally about how kind of software companies price and sell. It's really fascinating to see, actually. So I think kind of there's a lot of talk about pricing model evolution and pricing model A replacing pricing model B. I think the reality is that pricing as a whole is getting more complex and companies increasingly combine multiple pricing models. It's becoming more multi-layered and value aligned, let's say. And you see, the most successful companies today leveraging a mix of subscription, seat-based, usage-based pricing, so multiple kind of models simultaneously, what we refer to as hybrid pricing. HubSpot is a good example of that. They strategically brand subscription and consumption-based pricing. They use the former as this accessible module for their core product, whilst they leverage the latter to monetize further when utilization for specific things exceeds a limit, like additional email sends or number of contacts in the CRM. Intercom, for example, actually just launched their much-awaited kind of new pricing model, combining two different types of seat-based pricing, and then they have these different fixed price add-ons, and also a number of usage-based items included with their new sort of launched AI bot and AI services. And what's interesting is actually these companies are presenting pricing in quite simple ways to their consumers, to their customers. I mean, that's imperative, but they're able to really strategically kind of optimize revenue by mixing these pricing models across different aspects in their product suite. So I think that's definitely kind of one trend we're seeing. It's very rare that we'll see a company come to us and say, we're a simple SaaS, we're a simple kind of software as a service, and that's it. Not that that's a bad thing in any way, but this is just something I think we've observed that's happened in the market, certainly over the last sort of 5 years. And then I think a second, this is a hot topic, but definitely we're seeing more widespread adoption of usage-based pricing. In this recent Stripe sessions, they said that about 80% of SaaS companies, 80%, that's a very high percentage, either today have a plan to adopt some form of usage-based pricing. And I think, again, it's not just that it's UBB in isolation, it's generally in combination with some other pricing models to drive more revenue across their existing product base and or to price new products. And then I think another quite interesting shift that we've seen. A few years ago, we saw this explosion in PLG as the kind of holy grail of go-to-market, right? Like, you switch on self-serve, people find you, they buy it themselves, and, you don't have to build and house these huge sales teams. But I think at least we've seen a big shift towards companies not only with hybrid pricing, but also running this hybrid go-to-market motion, which means they're combining traditional top-down sales with bottom-up adoption. And, the implication for this is that the back office infrastructure and the financial operations you need to manage this is getting more complex. It's this clash of the highly automated, API-based, self-serve world, kind of PLG bottoms up, with the highly manual, bespoke, one-off sales-led approach, and unifying these two in a seamless way, can be quite challenging. Consider things like pricing between these two segments, packaging, discounts, freemium customers getting upsold to a contract and kind of then going through a sales flow. And what you see in some of these software companies today is that there's entire engineering departments that manage pricing, packaging, and billing, which is sort of unheard of, maybe in the world of very simple software as a service. And then I think a couple more trends I'd love to highlight, or things maybe we've seen evolve over the last 10 years. So I think from a buyer's perspective, there's this general trend towards reducing friction in transactions. And I think what we've seen is a ton of investment go into PLG tooling. Stripe really led the way to a large extent here. But I think the revenue management around B2B sales is still lagging really far behind. And, we can dive into maybe why that is. But this is something which I think we're going to see a big shift in, because I think it really needs to catch up. And then the last kind of maybe observation is that I think what we see more and more is that modern sales operations and finance teams work far less in silos. So when you think about how kind of revenue management has evolved, these teams are more interconnected, they're more multidisciplinary, they're communicating across multiple channels. The rise of things like Slack has facilitated that further. And I guess you see historically, like the previous generation of products, CPQ or billing, it was generally designed around one team, and that made cross-team workflows really challenging. I guess one of the sort of answers to this is now you see a kind of rise in a new generation of products, not just in our space. You see it with Rippling and the HR and kind of IT consolidation, or many others where we're seeing consolidation of workflows across multiple teams because of the kind of value of the unification that comes from sharing data and kind of having work well coordinated. I think in summary, a lot has changed and is very rapidly changing about both revenue generation and how companies price and sell, but also kind of revenue management.
Yeah, I think there's so many interesting factors here. I mean, back in the original days of just cash face-to-face trade, there was a bartering, which I learned my lesson in the shouks of Istanbul, and then you sort of appreciate to some degree that you go into some stores in Europe and there's just a price and you buy it. And then you come to America and you go, say, to a local restaurant, and there is, in San Francisco at least, there's a price, and then there's like a San Francisco city tax, and then there is like the state of California tax, and then you have to tip on these buttons. Like, it used to be 10, 15, 18%, and now it's like minimum 20, 25, 30%, and you're here. Then you start translating this online, and these things get so complicated, and part of that is just the competition is more fierce than ever, right? We now have people from all over the world that can compete for your business for certain software. And the pressure to generate a little bit more revenue is higher than ever because it's such a shift from the public markets valuations, where it used to be based on net income. And then there was the argument for EBITDA. And then for these massive, fast growing software companies, it got anchored towards revenue. So actually closing revenue is really important. It's more important now than it has been before. And so how do you capture that revenue? And so as you talked about, a lot of things have changed over the ability, but you've talked about some of the complexities, the needs. What are some of the major, I think, driving factors behind the scenes that got us to the place where we are today?
I mean, it's a great question. I think one of the interesting things is that today software companies, as you say, are launching more products and going global faster. I think that's partly to do with the fact that there's now an infrastructure layer beneath them that kind of shortcuts their time to market, either with new regions or new products, whether that's GPT Copilot or services that enable you to kind of create entities faster in new markets. Let's take a fintech company that needs to get regulated in order to enter a new market. It used to be that took a really long time to do. Today, there's an entire ecosystem of fintech infra players who take the compliance burden away, enabling fintechs to launch in new markets much more quickly. Or, take launching a new product. The DevTools ecosystem has exploded in the last 5 years. And the cost and time to build software has reduced dramatically, not to mention, this huge amount of VC dollars that is flowing into kind of funding software companies. Whereas you say the only kind of metric that's really kind of important, at least for the first kind of stages of the company's growth, is that top line revenue metric. And so all of this means that more software companies are building faster, they're launching more products, and they're going global more quickly. And I think one of the major driving changes towards the adoption of the kind of hybrid pricing models and a bit more complexity in how these companies price and sell is related to that. And then I guess to pick up on the sort of why usage-based pricing, like why is the adoption kind of so rapid today? I think when the infrastructure layer is based on usage-based pricing, companies building on top of that are incentivized to do the same to keep their margin. So, the emerging AI industry is leveraging UBP for a plethora of reasons. Cost structures and AI infra are evolving rapidly. Usage-based pricing models allow companies selling AI-based products to ultimately kind of maintain their margins. And, it's pretty dangerous kind of paying based on usage and then charging a subscription fee. So they want to maintain their cost plus margins if usage far exceeds what they anticipated. Prepaid credits, interestingly, kind of provide a way to capture upfront revenue and prevent these unexpected usage surges. But ultimately, we saw the same thing happen, I think, with cloud providers. They also charge based on usage. And so the app layer is passing those costs on. But also worth noting that we've seen a ton of data API infra companies be hugely successful leveraging these models. Snowflake, Datadog, AWS. These companies have been able to, grow with their customers and really capitalize on that. It's interesting, actually. My co-founder at Sequence was one of the founders of Onfido. And very early on, they had to make a decision on whether to price kind of based on a sort of software subscription fee or to price per background check, price per identity check verification. And at the time, actually, the software, the subscription fee would have probably actually got them more revenue in the short term. It's more predictable. And there's a lot of arguments to say that's a better way to go. But they won some kind of small-ish customers at the time, Revolut being one of them, and they actually decided to
just small companies like Revolut.
Yeah, but I mean, they were small at the time, right? They started 10 years ago. They made the decision to price, based on usage, based on the number of verifications that a customer does, and this, their kind of hyperscale was absolutely driven by the success of these customers and how quickly they grew. So I think a lot of software companies have seen those, and obviously you want to capitalize on the success and the growth of your own customers, and this provides a way to do that. These are some of the reasons why we've seen a lot more adoption of usage-based as a pricing model.
Right. It makes sense when you say it. The underlying, for software companies at least, the underlying infrastructure is charged on usage, whether you're talking about your Datadogs or your AWSs or your GCPs or your OpenAIs of the world. And then a lot of the sort of common knowledge at the time or before was like, well, let's charge either a seat-based or a flat fee. And I think depending upon the size, to check the numbers again, but I think maybe 30 and 60% of all of COGS of software companies are just from the core infrastructure, let alone anything else that's related to delivering this product. And so seeing this alignment can make a lot of sense from wanting to see a stability of like a gross margin or wanting to see a predictability that your revenue is matching your expenses and to create a healthy business. But that has created also a lot of complexity in sort of tracking this. So any thoughts or comments about how has software either evolved or not evolved enough for this world where a lot of the underlying infrastructure in our operating expenses and our COGS especially is around usage-based. But then there, like you said, the diversity of hybrid models come out. Some are usage-based, some are flat fee. So how is software either kept up or caused this problem, I guess?
I mean, I guess we're operating this space because we fundamentally believe software hasn't kept up. I think it's interesting with growth in the kind of adoption of hybrid pricing models. One of the things you see is that companies, change pricing, add new pricing models, change the deal terms that they're leveraging quite frequently through their scaling journey. It's not a kind of, we decide on day one, this is what we're going to charge, and we stick with that. There's probably more experimentation and adaptation as you sort of reach new customer segments, which is great, right? It's exactly what a company should be doing. I think a lot of the kind of incumbents in this space are kind of have been built with this notion that configurability, self-serve configurability is just not really something that companies need to do. And you see these kind of huge implementation times to implement your pricing model. And then, that's it. If you want to change it again, you got to bring in some consultants. And so I think there's opportunity for software to not only make it really easy to translate your pricing model today into a product catalog that reflects that and ultimately is able to capture all the nuances of that pricing today, but also kind of allows you to adapt that self-serve as you grow. So I think that's kind of one area where, we see an opportunity for software to evolve here. I think the second is that when you have companies, you're a sales-led business, you have companies with every one of your customers might have some slightly customized deal terms. Either you tweak a price or, there's a trial period or whatever it might be. And you're doing this across hundreds of customers potentially. It does become complex to manage, and, you need, I think you need software that really departs from the world of here's a 3 standard plans, and we can manage, very standardized pricing very easily, but not so much kind of track across the different deal terms a customer might be on. And not just track so that you can bill and invoice them accurately, but also track so that you can aggregate data and understand, what's happening across your business. It's hard to do when every customer is on sort of slightly different pricing. Another area I think we have seen at least kind of buyer needs evolve is, when we're talking about pricing, billing, revenue data, this is critical data across multiple parts of your organization. And I think when we see some of the legacy software platforms in this space, okay, yes, they might help you, sort of do quoting, manage CPQ, do billing, do invoicing, but a lot of that data stays captured within that software platform. Like if you want to access that data, you go into that software platform and you see it. I think today's kind of modern class of software platforms are really being built with this idea that data should be highly accessible and leverageable for different teams in other systems of record. And that's not, that's a great thing to do. By no means do you need to kind of house it all within your system and make it hard to access. So really building kind of deep integrations, native integrations with, very easy data mapping to systems like the ERP, the CRM, your own product and data warehouse. I think that's one of the kind of gaps that we've seen where there's really an opportunity to solve for.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Quick math. The less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform. That's one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required, accessed from anywhere. You cut the cost of maintaining multiple systems and improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 businesses have graduated to NetSuite, so do the math and make the move. Startup founders and execs running scaling businesses know all too well how easily their systems break down and expenses skyrocket. NetSuite is a proven way to cut costs and boost performance. And by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. head to netsuite.com/zen. That's netsuite.com/zen. netsuite.com/zen. Today, I want to make a bit of a personal appeal to anyone working on a SaaS app or website. If you spend any time on the internet, you probably have interacted with chatbots in the bottom right corner of sites. Most are really annoying. AI is making them better, but still I often just get really useless generic answers out of these and end up just wanting to talk to a real human. It felt to me like AI shouldn't just make chatbots marginally better at text responses, but that they should enable a new type of web assistant, something that feels like you're talking to a human support agent who is co-browsing alongside you. CommandBAR is building that user assistant. Companies embed it into their web app, mobile app, or website, and they get a fully generative chatbot that can give personalized responses that refer to a user's past chats, perform actions directly on behalf of the user, like looking up account info, and even start browsing alongside the user to show them how to do something, like a tour guide. It can also nudge users when they seem confused or frustrated. I love when I encounter CommandBAR in websites. It's white labeled, but at this point I can tell right away. CommandBAR already reaches more than 20 million end users with major customers like HashiCorp, Gusto, Freshworks, 6 Sense, and more. See for yourself at commandbar.com/MOZ or follow the link in the show notes.
It's funny, just on that point, it's funny to see, because I remember when I started my first company a while ago, that the best in class for payment software was authorize.net. And one of the things that they would do, aside from you'd have to talk to a salesperson, you have to justify to them why you were a real business and had venture funding. And then the challenge is they locked your data in the system. And Stripe came along and with a lot of innovation along the way and said, we're going to let people sign up and just be able to get into the sandbox and test it out. And it's your data. And they invested, not only did they allow customers to see and access their data, they actually spend a lot of time and effort building a best-in-class API. And we look, 10 years later, I don't even know if Authorize.net is still existing, but Stripe is one of the most dominant forces. We still don't see that adoption of sort of open platforms as much as I would expect in the market. I think in billing specifically, they have to now because you have to compete with Stripe. And Stripe said that we were going to build something that is the best for our customers. But we're not seeing that as much as I would like. In fact, in the banking system, it took regulation to say, hey, you have to share your data. And then what happened is massive companies have been built. And Plaid really pushed the boundaries here. We're still not seeing it as much in other places. One of the things that leads to, go ahead. Yeah, love to hear your thoughts.
Yeah, I was just going to say it surprises me because, especially in the part of the stack that we're playing in, I mean, this is really critical data. Billing, usage data, revenue data is so critical for so many parts of the organization that, it creates a huge amount of friction for any team outside of the finance team that might want to access that. Companies want that in their own product. They might want to build notifications or other kind of operational workflows off the back of status changes in your own product. Companies want that data in their own BI tool, in their own data warehouse. And of course, there are other key systems of record. Like we believe sales users live in the CRM and revenue leaders live in the CRM, and they want to live in the CRM and they don't want to move from there. So it's really critical that we make it easy, not just kind of pushing this data back to them, but also giving them visibility to configure what they're pushing and how and where. And I think the modern company with these cross-functional teams and who are trying to kind of bring down those data silos should and will adopt products that really emphasize this.
Yeah, I agree. And one of the not so hidden secrets for probably every finance leader listening and founder and revenue leader is this tension between revenue and sales teams with accounting and finance teams, because it is complicated. And sometimes these systems don't talk to each other as well as it could. And then when it comes time to either accounting or audit or business intelligence, you have the sales team presenting their data and you have the finance teams presenting their data. And it's not so uncommon that these silo data warehouse systems don't speak to each other. So can we just play a little point counterpart? What is in the mind of a sales and a revenue leader, and what are the implications for finance and accounting teams?
So, we see this all the time, by the way, this sort of friction that exists where sales teams want to close the deal as quickly as possible. They want minimal friction in that process. And frankly, they want to spend as little time on the kind of contracting and after sales processes as possible. The deal is closed, great. Pricing is shared, contract signed. Like, we want to move on to the next deal. And the implication of this to finance teams is often that, they're spending a ton of time manually trying to extract deal terms and understand them from a Salesforce notes field, an email, a PDF contract. And it can lead to, I think, errors and kind of revenue slippage because certain details can be missed when you're taking that approach. We've also seen a lot of teams tell us that, sales are sometimes closing contracts that the billing engine actually cannot support.
The product teams and everybody else that are in the downstream effects of closing that deal on bespoke one-off stuff can be quite painful.
Two kind of examples come to mind. We had a Series C marketplace where sales had closed customers on a certain usage metric, basically sort of on a transaction count that just actually couldn't easily be tracked in the system and billed for. And actually, another interesting example comes to mind where sales had used a pricing ramp to make the deal proposition more attractive, which, feels super reasonable and is actually probably what sales should be doing to get that deal over the line. But it's just created a ton of downstream complexities for finance. I think we also see a lot of cases, especially in kind of upper mid-market or enterprise customers, where, you are starting to think more about margin and some of the more serious metrics, and it's finance want to have eyes on kind of some of the quotes that are being sent out, either to weigh in on pricing or to sense check that actually pricing meets the guidelines or the guardrails that they want to operate within. But in many cases, what we do see is that these two teams are, we've used the word a few times, living completely in silos, where sales are operating over here, finance are operating over here. And partly that's to do with the fact that, a lot of the software platforms built in the kind of previous era were siloed systems, So a product built for a CPQ built for sales teams, and then a billing engine and invoicing engine built for finance teams. Not only can you achieve like much better synchronization when there's a unification of those two processes, but the other critical thing is it's not just about finance pulling information from sales so they know what to how much revenue to collect and how to bill the customer. It's also really critical that finance can push all of this data back to revenue teams, right? Revenue teams want to understand a customer's actual usage against a contract. They want to understand, potentially how to slice and dice revenue by product line or customer segment. They want to understand when a customer is not paid or when a customer breaches a certain threshold and actually they want to take an action. And so it's actually, I guess, more damaging to the go-to-market function to not have great synchronization between sales and finance, because the data that can be fed back to the CRM or back from finance is extremely powerful for them to build their business. So
this feels like potentially could be one of those problems that we all feel and we all know. It's sort of that like Paul Graham's famous essay, Schlep blindness. Like, it's just been a problem for so long and we just deal with it because that's just the way it is. Can you bring this to life? Like, how big of a problem is this really? And like, when you back at your feeder days, like, can you bring this problem to life a little bit more?
Yeah, I mean, it's such a cliche, right? You start a company, you feel a pain point, and then you go and build another company off the back of that pain point. But yes, like I definitely, as you said at the start, I'm that cliche, that second time founder who sort of felt the pain the first time. So Feeder, we were building a sort of verticalized software platform in the restaurant space, pretty different actually to what we're building today, but software nonetheless. And we had, a hybrid pricing model. We had a usage-based element to our pricing, but we also we had sort of different pricing for our mid-market and our enterprise tiers. Well, I say mid-market, we actually have a bunch of SMEs on the platform as well as some kind of major banks. So a pretty big variety in our customer base. And what we were finding is, because we had a sales team who were generally kind of, I guess, negotiating deals or slightly flexing pricing terms or using kind of discounts or trials and things like that for each customer, we needed just a simple way to translate those custom deal terms into accurate real-time billing and invoicing. Like, that was as simple as the problem was to start with. And as our customers scaled, we also wanted a way to obviously track revenue per account and per product line and sort of aggregated metrics, especially with the sort of usage-based pricing component. We also wanted all of this back in our BI tool. But we were so far from it, honestly. We started with spreadsheets. It got super messy. Then we started throwing more people at the problem. Our finance team kind of inflated. And then we eventually started building custom tooling in-house to automate. And so we literally built a pricing engine, a product catalog, order forms, a billing engine. We also had to build all the syncs to the other tools, sync to the tax API. It was a massive waste of time for us. But when I sold the company, started talking to just a ton of other founders who were, B2B sales-led companies and figuring out how they were doing things. And, we wish there was a kind of Stripe equivalent for what we were trying to do, because like Stripe really set the kind of North Star for e-commerce PLG, that use case. And there just wasn't, basically. And so decided it was a big enough problem to build into. Actually, just, how do you know this is kind of a big problem? One anecdote that I think is pretty interesting. So one of the biggest incumbents in this space, if we think about Stripe over here, and then you come to the sales-led world, the biggest incumbents in our space kind of historically have been Salesforce, CPQ, and Zuora, right? And Zuora, a public company that's been around for a while. One of the problems is that a massive portion of their revenue is based on kind of implementation and consulting services, and about 30 to 40% of their implementations fail. And so this kind of right? Just hearing this made us think, surely there's an opportunity for a new player to kind of completely rebuild this stack from the ground up with modern primitives and workflows that really match how teams work today, with a very flexible data model under the hood, a simple opinionated default so that companies can onboard quickly with, intuitive configuration under the hood. And so philosophically, I think we're a very big departure. We built this company with a very big departure from the way we've seen kind of incumbents tackle the space. Also to the question of why do we think this is a big problem? Why do we think this is broader than just I felt the pain point and therefore decided to build something? It's quite interesting. I think we've seen a lot of innovation in the spend and procurement category. So AP and payables in the last 5-6 years has seen the rise of Ramp and Brax and Zip, who consolidate operations across spend and procurement and actually consolidate across what used to be probably lots of different point solutions. And, Rippling recently launched Bill Pay. Maybe the focus on spend in the last few years has largely been driven by the market environment. But the other side of the coin, quote to cash, revenue management and in a B2B context has received very little attention, despite how broken the process is at many companies. And for that reason, we really believe there's room for a category leader in this side of things.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Fast forward to the end of 2024. Think about your goals. What can you do right now to give yourself the best chance of succeeding? If learning a new language is on your list, you absolutely need to check out BABBEL. BABBEL offers a range of learning tools, self-study app lessons, live classes, and even podcasts, which have always been my favorite way to learn. Studies from Yale, Michigan State University, and others continue to prove BABBEL is better. One study found that using BABBEL for 15 hours is equivalent to a full semester at college. BABBEL isn't just a game to kill time and make you feel like you're learning a language. It's not overly academic or rigid either. It's all about learning language for the real world. BABBEL stands out because it's designed by real people using a modern conversational teaching approach. It's not always easy, nothing worth doing ever is, but it's straightforward and designed to help you start speaking in just 3 weeks. With BABBEL, I was able to brush up on my intermediate Spanish to ramp up for travel to Argentina last year, and was able to set clear goals based on how much time each week I wanted to practice. Join millions of BABBEL language learners across all age groups. Here's a special limited time offer for our listeners. Right now, get up to 60% off your BABBEL subscription, but only at babbel.com/Torenberg. That's babbel.com/Torenberg, spelled BABBEL.com/Torenberg. Rules and restrictions may apply.
There's a world where your CRM is powerful, easily configured, and deeply intuitive. Attio makes that a reality. Attio is a radically new CRM built specifically for the new era of companies. It's flexible, easily configures to your unique data structures, and works for any go-to-market motion from self-serve to sales-led. Attio automatically enriches your contacts,
syncs your emails and calendar, lets you create powerful reports, and quickly build Zapier-style automations. The next era of companies deserves more than a one-size-fits-all CRM with an outdated UX. Join 11 Labs, Replicate, Modal, and more. Try Attio instantly at attio.com. That's attio.com.
You're building a new software product. If we, as a CEO, right, myself, we hire salespeople to sell, and we hire accounting people to track it, and we hire finance people to understand and grow the financial health of the company. Yeah, and compliance and tax and audit, a whole bunch of other stuff too. Is this a business problem? Is this just like a human nature problem? Is this a software problem? Like, is it a combination of all the three? How do you solve?
I don't think it's a human nature problem. I actually think primarily it's a software problem. You're right, the jobs to be done are different. Finance teams have a very different focus to kind of sales teams executing on contracts and pricing proposals. But ultimately, these jobs to be done, are being done to achieve the same purpose, which is to collect revenue. And they're also stemming off the same data sources, the same product catalog, there needs to be sort of shared visibility and kind of consistency across, deal values across sales and finance. So, yes, the jobs to be done are different, but same data, same kind of overarching goal. And for that reason, we think a more unified approach makes a lot of sense. And I think, on that point, it's easier to build a software platform for one team, right? You sell to one team in the business. And in some categories, that makes a ton of sense. But I think with revenue, if you don't have some unifications between sales and finance, CPQ and billing specifically, or even just the ability to extract accurate contract terms and translate that into the finance engine, you have a huge number of problems with sort of data and workflows both ways. And I think one interesting analogy that I really like to draw on, so Rippling kind of coined this notion of a compound startup. And, I guess for anyone who sort of doesn't know Rippling well, although I doubt that's the case for anyone listening to this, but they entered into what was an incredibly crowded, HRIS space, lots of products out there helping people, teams, manage absence tracking and employee records. But fundamentally, I think they took a different approach, and they said, actually, really fundamentally, we're a database for the employee records. And you can build these very rich employee records through Rippling. And what's key here is that changes in employee data, someone joining a company, leaving a company, getting a promotion, all the other things that happen to employees through the life cycle of them being in a company, has an impact on a number of other teams and processes, has an impact on payroll, has an impact on issuing spend cards via Brex or Ramp. It has an impact on device management. And one interesting thing I think that Rippling did was they said, we're going to become this database for the employee data record. We are going to build an application layer in some of the things that stem off the back of these employee data records, like absence tracking, payroll, etc. But we're not going to build every single application that stems off the back of these employee data records. Instead, we're going to build really, really rich native integrations with any system that might want to leverage these records and make it really easy to make one update in Rippling and have that reflect elsewhere. And when you actually reflect on it, that's a pretty wild departure from how most traditional HR systems have been built. They've been built as these kind of closed systems where, a change in the system informs only the applications or the features that that system houses. And it's highly impractical because, the employee record is so relevant across so many things that are happening in the company. And I guess coming back to the question you asked about, salespeople are hired to sell and finance people are looking after a very different set of jobs. Yes, that's true. But actually, a lot of the things that are happening across the quote to cash workflow stem off the back of the same kind of database of records. And when you think about it that way, it's not that, we have to build every single application that touches sales and finance teams. We'll integrate with external tax providers. We'll push data to other sales compensation tools so that they can have real-time data on revenue. But fundamentally, by capturing that, unified set of data records on revenue and making it really easy to natively integrate with other systems, we think companies can be at a much bigger advantage, and both sales and finance teams can be at a much bigger advantage.
So I guess if we go back to the wise words of Charlie Munger, something like, show me an incentive and I'll show you an outcome. So salespeople are going to do their thing, and finance and accounting people have to do their thing. So it's probably not a human nature problem to solve, but there's a software problem that needs to solve for the complexities of the real world of how revenue exists in the world today. And it's more complicated. And so clearly this led you to start Sequence, which you describe as magically simplifying quote to revenue. So can you tell us in your words, what is Sequence?
Sure. Ultimately, Sequence helps modern finance and commercial teams bill for any pricing model or custom deal term. So B2B software companies can unify CPQ billing and revenue recognition. And we really focus on providing deep integrations with other systems of record like the CRM, the ERP, and a company's own software product so that they can leverage revenue and usage data across the business. I think we're at a really exciting stage in our growth journey. We're backed by Andreessen Horowitz and working with a number of amazing mid-market scale-ups and now some enterprise customers, really helping them to automate billing and invoicing for kind of any contract, any term, a hybrid go-to-market motion. And then we've recently launched what we call a kind of modern CPQ product, which layers on top a really delightful sort of sales quoting workflow that launches natively from a company's CRM and allows them to build their product catalog and build and share contracts. And then we capture all of that data for all the finance and revenue automation downstream.
And what is Sequence replacing today?
Very often a ton of spreadsheets and, people toying with building in-house products. In some cases, we're replacing sort of maybe a legacy competitor in the market, or like we'll see companies who have a point solution in the billing space already in place, but they're seeing a lot of this friction whereby they don't have any kind of automation or sync with the CRM and the billing tool. They're experiencing a number of frictions with the existing incumbent billing tool whereby they can't actually model their hybrid pricing or their custom deal terms. So in some cases, I think, earlier stage companies were replacing spreadsheets, later stage often sort of replacing kind of an incumbent billing solution.
And what's the grand vision?
The grand vision is world domination, of course.
What's maybe a step or two before world domination?
No, the grand vision, we really want to give companies this sort of unified infrastructure to automate their revenue collection and revenue management. Companies should be able to price and sell in any way that they want to. They should be able to leverage any go-to-market motion. They should be able to change that over time. And we want to make it really easy to capture the key commercial and pricing terms from a sales contract. And off the back of this, automate a whole series of kind of revenue workflows that touch finance, revenue teams, and operations that would otherwise be really hard to kind of sync on and manage. When we talk about workflows, there's so many things that companies have to do to accurately be able to collect revenue and to use that data. We think there's a tremendous opportunity to make that really simple and highly customizable for a company in the way that they want to work. You can launch on day one with a very simple quote to cash workflow with, your sales team literally spinning up pricing proposals in seconds. And over time, you might want to, layer on approval workflows and change those things. I guess building a product that ultimately gives the companies the infrastructure to build and grow really quickly.
I love it. Revenue is important, and for every company, it's the best form of growth capital, and it still is quite complex, and there still is a lot of room for improvement, especially between finance teams and revenue teams, which are aligned in the grand vision, but sometimes the tools can force some conflict. So as we sort of wrap up, any kind of lessons learned or closing advice for finance teams and revenue teams?
I think finance teams minimize the number of tools in the stack. Like a great like bank account and treasury solution, a great spend and procurement platform, a great revenue platform, and maybe in a great FP&A tool.
Great accounting software, maybe as well.
A great accounting software, of course. Sorry, that's a given. And choose Puzzle, of course. But yeah, sorry, that's a given. There's some things companies are born with, right? It's an accounting software and a CRM. So we think about those as kind of being the, I guess, foundational tools a company will have, and then a set of kind of operational products that live around those. And yeah, look for companies that are really kind of or products that like really make integrations easy across your tech stack, because I think the strategic CFO wants to be able to arm the rest of the business with great data. And what's interesting with something we're seeing today is like we're seeing a lot more companies hire build a RevOps team. It's becoming, as it's a sort of growing, more popular role in many of the companies we speak to. And so I think we see finance work very closely with RevOps. They will genuinely and generally build a kind of more robust and seamless workflow across sales to finance.
I think these are a place where there's such a huge opportunity. So I'm excited for what you're building at Sequence. I'm excited for all of the revenue and finance teams out there. How can people learn more about Sequence?
Go to our website is probably the best way. So we're sequencehq.com. Yeah, or you can reach out to me directly. I'm Riya Grover on LinkedIn. Be happy to chat.
Riya, thank you so much for joining us.
No, thank you so much.
All right.
Really enjoyed chatting. Bye, Sasha.
Bye.